This one issue is currently being completely underestimated. The S&P 500 is hitting new all-time highs week after week and is tracking the M2 money supply exactly, while Bitcoin is correcting. Since mid-August, we have no longer been following the M2 money supply, moving in the opposite direction, while traditional stocks continue to follow the M2 money supply. And that's already very interesting and also somewhat alarming, and for some people, it makes them extremely bearish. In the end, we're currently in a period where Bitcoin isn't really that volatile anymore. I mean, just take a look. But we can see that over the years we've had less and less volatility, and especially recently Bitcoin hasn't been volatile at all. We've simply seen a lot of volume leave the market here, which makes it even easier for market makers to manipulate the market. And that's exactly what we're seeing, because just recently we had the biggest liquidation of the year. Over 500 million in Ethereum longs were liquidated. Here on this chart, we can see once again this was the largest liquidation of the entire year. So this liquidation was really massive, and the market makers are taking advantage of it. I showed you this here recently as well. The Bitcoin price was stagnating here, the futures volume too, but the spot volume was rising. And from that you can see that the market makers are up to their tricks again, and that what they're doing right now is intentional. They're manipulating the market because there's currently not much volume, and as a result, we're no longer following the M2 money supply. And it becomes even clearer if we just take a look at the Ethereum whales. The Ethereum whales, those holding over 10,000 Ethereum, have accumulated more Ethereum in such a short time than ever before. What we've seen here is crazy. A huge amount of ETH is being accumulated in the background right now, just like we've seen in recent weeks. Michael Saylor is also scooping up a lot of Bitcoins again. Companies like Metaplanet are buying over $600 million worth of Bitcoin in one go. We've also seen that companies like BlackRock have put around $220 million into Bitcoin daily just in August. So the big players are also buying a lot of Bitcoin in August, sometimes $2, $3, $4, $5 billion that have flowed into Bitcoin just in August. But the price is falling, the price is stagnating, the price is correcting, and that's what's so interesting here. Because in the end, this confirms my assumption that these are just market maker games. And it's actually not such a bad thing, for example, that the S&P 500 has performed so well recently. It's even better if it continues to rise here, if it keeps going up in the next few weeks. It reaches new all-time highs, Bitcoin remains stagnant, and then this will happen. When the S&P 500 turns and corrects, the money will be shifted into Bitcoin. And then Bitcoin will stagnate a little longer, and then it will start to rise because the money is being reallocated. People will see, okay, we've made most of our money with the S&P 500 now. We've made good money with the big stocks. Now the money is being reallocated, and then Bitcoin can take off. That's basically the roadmap for the next few weeks, because in the end, Bitcoin has already made some moves here, delivered good returns, and is now stagnating a bit. It's catching its breath again right now to then continue the next upward trend. That's why, in the short or medium term, we could see a bit of stagnation or a slight correction here. That's definitely possible. What I could also well imagine is that we might break below this low at $170,000 again, because that was our low. Since then we've been rising, and the tendency is that we might start to rise a bit again here. If we break through this level again, people will say, yeah, now we're making lower lows. Now it's going even lower. People will turn bearish again. And it's exactly then, when people are bearish, that we could see the turnaround. Because right now, sentiment is almost in the neutral range, but leaning more towards bearish. And I think it needs to look a bit worse so that people become a little more pessimistic, and that's exactly when we could see a reversal. That's something I could honestly really imagine happening. What you also have to say is there's still a lot of liquidity down here. So it's really not unlikely at all that we'll come back down to pick that up. What I also find extremely interesting is that we now have 7.5 trillion US dollars in money market funds. These are funds that benefit from rising interest rates. That's when they offer a good return. The thing is, the Fed recently lowered its interest rates. If they continue to cut rates, the returns here will become less and less attractive. The money will disappear and find its way into other assets such as Bitcoin. The same thing we saw in 2008 and 2009. Interest rates were cut, and at the same time money was taken out here and put into risk assets. And that's exactly what makes me really optimistic, because what is certain is that there will be further rate cuts. And what is also very clear is that we now have 7.5 trillion US dollars in here, which is crazy. Additionally, another study by Bank of America shows that 75% of all investors currently have no experience in the crypto sector or do not yet have access to cryptocurrencies. Especially the banks, they are still way behind in this area. And if that changes, it will give us a lot more room to grow. And that's exactly what we're seeing now. Because another document from the SEC has just been released. Specifically, they want to promote more crypto companies. How are they going to do that? Crypto companies can launch products in the US without the previous regulatory hurdles. And that's a huge game changer. Because the US is already very technologically advanced, a lot of innovation comes from there. The problem is, from a regulatory perspective, it's a huge effort. It costs a lot of money to get anything crypto related off the ground there. That's about to change now. And with that, the US will become the crypto capital of the world. And that's incredibly great to see. It's also funny that Europe is completely ruining this for itself right now, while the US is becoming more and more crypto friendly, and that's going to boost the market overall anyway. Additionally, we can see that stablecoin dominance keeps increasing, and that's also connected to the US. Just look at this growth in stablecoins. That's a huge inflow. We're seeing more and more stablecoins on the market, with multi-billion dollars being added every week just in the stablecoin sector. And I'm telling you, this is also extremely closely tied to the US, because the US is really pushing stablecoins upward since stablecoins are backed by the dollar. This benefits the US because it allows the US to maintain the strength of the dollar since the entire crypto market is simply based on the dollar. No one is using the euro, the yen, or anything else here. Everyone uses the dollar. Stablecoins are extremely valuable, extremely important, and they also use the dollar. This strengthens the US dollar, and that's good for the US because the US wants to continue dominating the world, and they can only do that with the dollar. Because just 2 or 3 hours ago, the news came out that the company Tether is raising $20 billion from investors for the USDT stablecoin so they can further promote the product. These 20 billion are valued at 500 billion, so the company Tether is currently valuing itself at $500 billion. You have to imagine that's gigantic. This would make the company more valuable than BYD, many times more valuable than Rheinmetall, and whatever other companies you know. And with that, Tether is playing in the league of the biggest corporations. It's not quite at the level of Google, Amazon, and the like yet, but with this momentum, the company is getting closer and closer. And that's crazy. But it also clearly states here that they have enormous revenues and seemingly hardly any expenses. Just last quarter, they raised almost $5 billion and have reserves of nearly $172 billion. That's really incredible. And you have to realize all of this is just because they have the largest stablecoin in the crypto market. And that's why I say the stablecoin sector is gigantic, and right now the stablecoin sector is really being pushed. It's getting more and more of the action, and if this continues, things are going to get really interesting here. But to be honest, you also have to say that the stablecoin market is one of the few markets here that actually has a real use case. And I found this article very, very interesting because here they talked a bit about the cycles. It clearly states here that the current cycle is a bit different from the previous cycles. Because in the last cycle, we had 2 bull runs, 2 nice upward trends. In this cycle, we've already had 3. That's partly true because, just look at it. Step by step, we're building it up, and that's 3 upward trends. Because they measured all of this here using the 21-day moving average, and that's on a weekly basis. And I understand all of this because, here we had a strong upward trend, and here, that was the last cycle. Before that, the cycles just ran straight through. This cycle, here we had a strong upward trend, here we had a corrective phase, here an upward trend, another corrective phase, and currently we're here again in this upward trend. But what you have to say very clearly here is that a certain zone needs to hold, because otherwise we'll slip back down into this negative area, have a sideways phase, and correct even more sharply. And this area is exactly here at $109,600. If we break through here properly and sustainably, we will see a sideways phase and will probably go even lower, possibly even towards $100,000 again. So the $109,000 is currently a very crucial zone that should hold. This indicator should hold. If it doesn't hold, that would clearly indicate that we will continue to correct for now. Because so far, this indicator has worked perfectly in this cycle, perfectly signaling the uptrend, but also perfectly signaling the down phases. But overall, you can also see from this indicator that we are definitely still in an uptrend here and not heading towards a bear market or anything like that, because a bear market looks completely different. We continue to rise step by step, just a little differently this time. This time it just means that we've already had 3 small bull runs in this cycle, and that's true. During these phases, altcoins also performed step by step, but of course we didn't have an altcoin season here, which everyone is expecting. But especially during these uptrends, we definitely already saw nice gains with the alts and in general also with Bitcoin. At this point, definitely keep this indicator in mind because we simply don't want to fall below it. Otherwise, I want to sincerely thank you for watching and say see you next time. Bye.